Hello, everyone. Welcome to this week's update on our instrument. I'm going to be touching on a couple of instruments, DXY, and I've added pound USD to the instruments that we're looking at. So we look at DXY, Euro dollar, pound USD, NZD USD, USD JPY, and gold. So we're going to look at these instruments and see how we navigate and plan. So I'm starting with monthly candles here. So we're going to look at these monthly candles to decide and to actually determine where exactly we are going to see dollar begin to fall from here. Now, you are conversant with this structure, and we still need equal harm to the downside. We said we believe is W, and this is Y. Now, seeing this, any moment from now, dollar will begin to fall. But because I said dollar will begin to fall any moment from now, you don't want to blindly also begin to sell dollar, even though it's going to fall any moment from now. Now, selling dollar is what we are looking at. But again, if you decide you want to buy dollar, you have to trade it cautiously because it's at its peak and it's in the sell zone right now. So where are we looking at since we have broken the top of of W? You can see on Friday, immediately we broke this resistance at the top of W, price, retraced and corrected towards the downside. All you can do is to look for support if you are going to buy the dollar right now, because any moment it's going to grow cold on you and begin to fall. But as for me, like I said, this is a 70% area, which is at 100% extension, which the dollar has broken right now at 108. So the dollar had broken 108 to reach about 10800. So price had broken that. So we are looking at price coming to the vicinity of 110, and that's the last place we're going to look for dollar to begin to grow weak and begin to fall. Now, on the monthly candle, we're going to look at a particular resistance area, which is the high place of confluence for this price to begin to fall. If you see this doji in the middle of this price action here, exactly at the tip of that doji is where we see as 109,583 or approximately 109,600. And I believe between 109,600 and 110,000, dollar will begin to fall. Now, we are not saying, because the right attitude to selling dollar is not also to put your pending order in that area, thinking that it's going to fall right in that area. Dollar may fall shortly before there. Dollar may fall around that area. The best to do is always to look for 4-hour price action in that zone. So once you see 4-hour price action, sell. And if they don't want to fall from there, we'll see the action that follows immediately after the closure of 4-hour price action. You don't wait for. If you want to be very conservative, 4-hour price action is okay. If you're going to do 1 hour, price may still take you out. And if price now decides to even break above the 4-hour price action, we look for sell again, because it might just break it momentarily and begin to fall. And when it begins to fall, you might not be able to catch it. So now we are looking at that zone 109,600 and 110. Now that's what we are looking at. Now, if you look at, I won't be going inside of the DXY. You know what to look for. If you look at euro dollar, we're going to look at the area we expect it to also begin to fall. It's the same principle, if anything you're going to do on euro dollar now, you want to sell euro dollar cautiously. You want to sell it cautiously, and we are looking for a buy. Any moment from now, this price is going to go cold on us. Now, with DXY, we were looking at this tip, but with euro dollar, rather look at this tip here between this candle where this wick got to and this close of the candle. In between these two areas, that I believe that the euro dollar is going to begin to rise. There is a little difference between the structure here, you know, the way it formed and completed. You know, the euro dollar is more shallow to the downside, and the DXY is more, you know, deep to the upside. So that is why you don't do word for word and you want to copy and paste and say, okay, it's at this area that you expect dollar to begin to fall. That might be too much, and it might not make any structural sense. Of 10089, I don't think it will come there. So you should be looking at the fringe of this candle here, which is at 1.0250, and where it closed here, the body of this candle here, 1.02250. So between 1.02250 and 1.0250, 2050, yeah. 2250, 2050. That's about 200 pips. So within that area, we'll see a route. But if you now want to now know exact where you can play around, that is where you now have to go into the structure. So this is Y, and this is W, and this truly looks like a Y structure, the way it had fallen at the end of the day. It had fallen to give us this. So we are seeing these on the monthly, because if you really want to look at it on the monthly, the best you can do also is to look at this, the way this one fell as an A and a shallow B and a C. An extension of this C should be stalling at about 100 or about 123. Yeah, 123 extension. That's where I expect it to stop between here. It is A, B, C. It's going to grow beyond 100, probably around 123. So that's where I expect it to stop. Now, if I'm going to go back to the, because I want to dwell more here, let's look at the daily time frame. Straight, I don't have to look at it. So let's look at the daily time frame here. The daily time frame structure here. So that's what I'm talking about now. So the daily time frame structure. So if we divide into two, so we said that this is like an A structure, this is like a B. So an extension of the C should be, because it's corrective, and again, we're going to look at the inside of the C structure itself, pari passu with WXY. So we're looking at the inside of this C structure. We are looking at this as a B, A, B, a shallow B, and this is a C wave to the downside. So looking at this as a C wave to the downside, we are saying that we are expecting an extension to the downside of the C at about 123, but not more than 127. That's what I think. If I bring out my drawing, it's going to be a bit messy now. Let me bring out my drawing because we're going to focus here. Bringing out my drawing here. Bringing out my drawing, you can still see that the W, let me look for one that is not as messy as this. So let's look at this. I think I have this one drawn, right? I don't think so. I don't have it marked. So let me look at where I have marked. This. Let's look at this. Good. So I have this one marked. I don't like this one. Let's look at this. Good. This is better. So I have this one marked already for training. So you can see that this is a W and the X stalled here. The X stalled here. The X stalled there. Let's take this out. And we may even use green for it. So that's where the X stalled. So a W, X, and Y. This is taken. It's all gone. Now, the 100% extension has been broken here. This is 100% extension. It has been taken out. So it has broken. We saw some reaction. And we are aiming at 1, 2, 3. That is where we can aim. So if you're going to aim at 1, 2, 3, to aim at 1, 2, 3, so we come here or 1 to 7 from the beginning of W to the end of a W back to the X here in green. So we can see that this is 100. It has been taken. 100 has been taken. So we are looking at this as a 1, 2, 3 area where price may come to. 1, 2, 3 area where price may come to. I don't expect more than this from this. A 1, 2, 3 area for price to engage now. So that's where the price, this had been taken. Okay. So, and 1, 2, 7 is where I think price should not break. So we can use red for that. All this one makes no sense again. These ones are making no sense again, so we can actually take this out. If I want to use this to divide that part, so we can have that like that. So now, 161, I'm not expecting price here at 161. I'm not at all. So, but we're still going to, we don't, of course, begin to buy blindly here. We are going to look for 4-hour price action here. Now, if I turn quickly again into the monthly, you see what I drew here. If I turn quickly into the monthly to see what I was saying at the other time, let's go to monthly again and see. This is a training. This is where we have to look for the price. So the monthly, I said, we are looking at this area here. The tip of this candle here. Can you see the tip of this candle here? That tip of the candle is actually agreeing with 1, 2, 3. So the tip of the candle is agreeing with what that is the high confluence area that you should expect price to get to. Or here, which is the close and the open of this candle here, this particular one here. So those are the two areas, the high confluence area, we are looking for price to navigate. So that area, but I would prefer the one here, but anything between here is good. Once you see price action in that area, it's good to go. Of course, I said price action, 4-hour price action is enough. Now, having said that again, I again said that we saw this as an A and a B on the monthly. So let's go back to the, so if I'm going to do that, we saw this as an A here, a B here, and we're going to turn to a C here. So let me change the color here. Of course, this idea you can transcribe and use for Dxy. So we are very close to where we can see anything. If they decide to truncate, it could even turn without hitting this area. But once they begin to consolidate in this area and begin to see some reactions or a wedging, price is going back up around this area. So let me do something. Let me look for this area of support for A. So let's go and fine tune on the daily. Let's go and fine tune on the daily and see what we get. So this is A and this is shallow B. Very, very, very shallow. Very, very shallow B. So that's what we have. And let's look at the field relationship we're going to get, or field extension that we're going to get. So let's see. Now, if you look at it, this area that is 1, 2, 3 of the WXY, this is 100 now, okay? This is 100 now. So it has, so we are looking at what is going to give us in terms of an A, B, and a C to the downside. So let's see. That should not break 1, 2, 6. I mean, 1618 anyway, if it's corrective. So let's look at it. Now we are seeing that 1618, broke the first red, and it's around the area of 1, 2, 3 here. So we can see that it could actually lay perfectly for us to have a reaction just before the red area. So this is the area we are looking, the high confluence area that we are looking for price to rehab. Of course, you can fine tune on the lower time frame. This is the area, that fraction is the area that I expect price to react, because that's 161.8 of A to B and C. I don't think price will break this area. I don't think so. But once you see if 4-hour price action, that is where to begin to look for your, or you see some wedging before that area, that will be the area to look actually for your buy opportunity. If I now turn to the, let me go back to the monthly time frame again to see where our resistance can be right now. Okay, now where to observe for resistance now is this area here, where is the support for this price here. This is going to have act resistance, so I don't expect price to break this to the upside. If you're going to have any retest to the upside here, before we get here, is an opportunity to sell again to this area. Now, if we now look at it on the weekly time frame, that area on the weekly time frame, I'm spending more time here on euro dollar, exactly here. So we can see exactly here, this is where to expect price resistance, and you may just push it slightly up here, I don't expect price to break this area again. I don't expect price. I think price has made it down right now, and price, it's about still going further down. to complete its move to the downside. So if we go inside of a daily time frame, so what can we see on the leg of C? Can we see anything on the leg of C? So what I can see on the leg of C looks like this is like a wave 1, probably a wave 2. This might just be the inside of a wave 3. It might just be inside of wave 3. Or at the same time, we may say also that this wave C, also we can divide into 2 parts. We may want to divide that into 2 parts also. All these are just academic, pure academic now. Pure academics now. Pure academics now. Into 2 parts for us to get a C. So this might just be an A, a B, and so we need 5 straight wave to the downside right now. 5 straight from here, straight wave from here to finish that, and probably an 100 extension, maybe an 100 extension. Maybe I should just use purple for this one, or maybe I should just use purple for that one now. Purple. Purple. So the price action also there suggests that we don't expect price to come and break this area. You may allow some correction to the upside for you to pick a sell. You may allow some correction to the upside. The correction might not take out this area, but you have to wait if it will take it out or not. This area, the correction might not take out this area. The correction might not take out that area. So what do I see in that area? I see a 1 and I see a 2 and I see this part of a 3. So it might just be a 3-1 and we're going to have probably a 3-2. A 3-2 might be deep, maybe towards this area. This is the zone I would expect this price to pull to before we go down again. This is the zone I will expect this price to push to. Look at the manner of correction that you're going to get here before you sell. This is your stop loss here. And as you go further down, then you begin to move your stop loss. I believe this is the last wave, C. Now, in terms of its length, let's look at what its length is going to give us to that area. To that area from here. If it's the C now being divided into 2, A and a shallow B wave. So looking at that, so what do we have going down? Looking at that going down, we can see that this is at 90. It's yeah, and 100 is a bit down here. So an 100 is just a bit down. So we might have it. It's just a rough guide anyway. Of course, the 100 is still above 127 of the monthly extension. So it's just to guide us. I think these are just the area of confluence for this thing to terminate. So we're going to wait and begin to look for 4-hour price action. So now within this last wave that we are seeing, so I'm already seeing something like a 1 and a 2 here. Let me show us. You have to really take a deep look because I expect that to run in 5 waves. If this is the last one, it should run in 5 waves. So that I see as a 1, a 2 here. So let's go inside of a 4-hour time frame. And that's the least area, the least price time frame that we can use to work. So inside of that, so now this is wave 1, this is wave 2. So we are going to see wave. This is wave 3. We are already correcting this particular wave. We are correcting this. This might not take here. This is 1 and this is 2. So the 3 start from here. All you can do is to look for from 3 to where the origin of 3 or end of 2, which is the origin of 3 to this point, and see what kind of retracement we can get. So from here, so let's look for about 76, which should be the last. 76 is actually around this area. Yeah, around that area. So 61.8 area is good to go for you. That's 61.8 area. So good to go area for you. And so let's just push this one a bit up to 76 as the area that I don't expect price to take now. So I think between this zone here, we should see a reaction, further reaction to the downside, and it may not get here. So it now depends on the kind of correction that we have before we get here. And I believe we are still inside of it with 3 here, and which is going to still go for close to 200 pips to the downside. So that's what I think. So if we have not finished this may just be an A, a B, and probably the C wave might just come here and look for another sell around this area. So that's what I can say here on euro dollar. So with that, let's go quickly into pound dollar. Pound dollar. Pound dollar. So what do I see on pound dollar? What do I see on pound dollar? On pound dollar, let's quickly look at the weekly time frame. The weekly time frame here, like I said, I've told her that we might likely break this area, but we may not break this area. So it might just give us a running flat, A, B, and a C here, a running flat. So where are we presently? Here. So let me bring out my drawing. So we see a W, we might see a Y here, X, Y. X here breaking above this origin of W. So in this case, is a 1, 2, 3 extension to the upside. So we expect a running flat to the downside before we break up again. So now, in the immediate, let's just look at the daily time frame here. What do we see? In fact, what do we see here too? If I zoom, so we can see also like an A, B, and a C. Now for this A, B, and a C, the C in the purple, where does it terminate in the purple to the downside? As an extension here, because that may guide us. A 1, 2, 3, it's really here. So let me just change that color. A 1, 2, 3 is there. A 1, 2, 3 is there for the purple, and the 1, 2, 7 is falling on the blue. So which we can say that it may not take this button. It may just eat this as 1, 2, 3, because if like it's an A, B, a 1, 2, 3, and 100 is here. Let me bring it out again. So the 100 extension is here. This is a very powerful place. If price should break here, then it's coming to 1, 2, 3. But this is a very powerful place for price to terminate. So that would rather first look at this area for price to terminate of the area of 1.24540 for the price to terminate. And if price should break that, then we are going to 1, 2, 3, this area just before we break the bottom, just nearly 23,168 or thereabout. But the 100 extension is an area here that you must be looking for your price to terminate. And what makes this area also a very strong place rather than this place let's look at daily time frame now. Looking at the daily time frame, so we can see that the price came down, bounced off from here, this is support, to hit the resistance, say an A, B, then to the downside, which we are running C to the downside. But clearly again, if you look at the pound USD likes running flat a whole lot, structure a lot. So we can see immediately after this resistance, the first price that came down looks like 1 here and a 2 here. So we can see a 2 here. Then we can see this as the third wave and this as the fourth wave. So I believe this should be the last wave to the downside. And in this being the last wave to the downside, there are a couple of things I want you to see here. Except this is taken to the downside, then if we look at our fourth wave to third to fourth wave to pick the red, where you expect the price to stall based on what you know from if price could just do hello. I'll call you back. So if you expect price to start, if you say wave 1 equal to 5, this area, and you clone it, it has been taken as well, broken to the downside, you can see. Now, the only thing that is remaining of wave 3 or wave 5 is to look for these as an extension from wave 1 to 3 back to 2 of 125 or 127, which is around this area of 125, now 126, right? So this area also conflicts with what you expect, to be the limit of wave 5, if indeed this is a wave 5, except it's something else. So look for 4-hour price action in this area first, and if not, if it breaks it, then we can go to the area of the purple below. I think with that, let me stop for now. I'm going to do the second video, please. So you can watch out for the second video to complete the others.